Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning. Welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London, in for Francine. Here's what's coming up on today's program. Contagion or contained, the crypto rout pauses, but FTX warns of bankruptcy after Binance bails on a takeover. Sequoia writes down the entire value of its stake in the exchange. Inflation in focus. Europe follows Wall Street into the red and then rebounds some ahead of the crucial U.S. CPI data. The Fed's Evans says it's time for the pace of rate hikes to slow. Plus, 2024, here we come. Joe Biden says he plans to run for re-election even as House and Senate races have yet to be decided following Tuesday's midterms. Well, it is the three C's dominating sentiment. It is centrism after those U.S. elections. It is crypto and it is CPI. Crypto did have the effect of beating down essentially every risk asset yesterday. You see European stocks still following on some of that negative sentiment. Not as bad, though, down just 0.3%. It is a rebound when it comes to U.S. futures. Those are up 0.2%. Rebounding with the wider crypto world. I'll show you that in just a moment. But it is a day of preparing, of positioning for the CPI. Basically, everyone and their mother believes that CPI is going to come in lower than it has in previous months. Yet you are seeing yields move higher. Showed you the 2-year yield there. Dollar somewhat steady. European markets, a little bit of unevenness. FTSE MIB, for example, that is unchanged. FTSE 100, that is down 0.2%. It is a lot of real estate. It is a lot of retail that is down today. To the upside, you have things like autos. You have things like banks. Allianz, one of the best performers in the DAX, so mitigating some of the losses there, but overall slightly lower today. So one thing that is helping is a bounce back in some of these cryptos. Still in the broad scheme of things, over a week, we are still looking at some pretty steep losses for Bitcoin. It was around 20,000 not that long ago. We are below 17,000 now, but still up 6% for Bitcoin. Ether is up 9%. And Binance Coin, which of course Binance was the exchange that was going to step in potentially to help rescue FTX, but now no longer is. That one is up 7%. So perhaps either dip buying or some rearranging, looking for the safety, or just a dead cat bounce. Now, it really has been a wild ride this week for cryptocurrencies. So to put a fine point on it, FTX, Binance saga, that's been unfolding. And as it did, Bitcoin fell to a 2-year low. And as I was just showing you, it paired some of its losses after Binance pulled out from buying FTX. Now, the co-founder says the beleaguered exchange is on the brink of bankruptcy, something that doesn't seem to be a surprise to another co-founder of this one of the Kraken exchange.
It looks like FTX might be heading into a bankruptcy process, the likes of which, we've seen frequently recently, unfortunately.
Many people are saying, is this a Lehman moment? Are we looking at 2008?
In real time, that investors are getting hurt.
We would actually withdraw some money or tokens from the exchange if we could right now. But, I'm not too worried. It is an excellent platform.
I don't think there's going to be value there, anything close to what the whole seems to be.
Joining us now is Barclays co-head of global FX distribution, Mimi Rushton. Mimi, thank you so much for joining us. Now, we just played some sound there of some various voices speaking to Bloomberg. Among one of them was the CTFC commissioner saying, or posing the question, is this a Lehman moment? Is this a Lehman moment? And if it's something less, is it just a moment that could lead to more contagion?
Thanks so much for having me, Danny, and good morning. I think it's certainly an interesting and a pivotal moment as it relates to crypto, but we've got to remember that this is still a relatively small market when you compare it to something like the world of foreign exchange, which is sort of my wheelhouse. So certainly it's something that market participants are going to be looking at very closely, and the inevitable questions are going to be asked about regulation and what this industry is going to look like going forward. In terms of contagion into foreign exchange markets, we certainly haven't seen it. There's definitely been some deleveraging of assets, and that's normal as investors sort of reassess their positions. But, as I say, it's going to be more something that is looked at, reassessed, as opposed to seeing a broad-based contagion. And I think probably drawing comparisons with Lehman is a little bit stretched at this point.
Mimi, I love it. I know you, perhaps you're being accurate here. Your world is more important. FX is so much more giant. I love that as a way of framing it. So let's talk about it. We have CPI today. Is this market potentially set up for a big move if the figures confirm that peak inflation is behind us, just considering how long this market has been on the dollar?
Yeah, so this is really an important sort of few weeks. And I think that this week in particular, if you look at price action, everybody's been grappling with whether this is the peak for the dollar or whether you're going to see a retracement higher again. And the Fed's made it very clear that we are data dependent. And so clearly data points like CPI today are going to be critical. You know, our expectation is for 0.5% headline and 0.4 on core. But as you say, there is the potential for surprise and so therefore a market reaction. And what's interesting here is that liquidity is not exactly particularly deep. A couple of reasons for that. Number one is because people have delevered coming into the back end of the year and are keeping positions relatively clean. But the second and perhaps biggest part is because we are trying to determine whether this is the point where we see the pivot of the dollar. It's interesting because, you know, the Fed meeting was the one where everybody was looking for the pivot. And by and large, I think people would say that wasn't a pivot meeting. I'm potentially of the view that, you know, we'll look back at this in a few weeks' time and think that that was the moment that we saw a bit of a turn. The other thing today isn't just the data point. We have a plethora of Fed speakers in the afternoon, and I think that the market will be looking both at the data, but then also how the Fed are responding to the data in the immediate aftermath. So, and definitely two-way risk.
So if we're going to marry those two ideas together, that maybe we'll look at the past meeting, say it was the pivot point, plus speak. We did hear from Kashkari overnight that said we are a long, I did write this down, it was 3 longs he used, way away from reaching their goals. So that's why any talk of a pivot is entirely premature. Mimi, I do wonder if what we hear from Fed officials will continue to be hawkish because to some degree, it's about credibility, right? Does just backing off of these rate hikes seem to diminish, you know, the guidance more or less they've been giving markets?
It's really interesting because on the one hand, we're sort of waiting for the Fed to pivot and to give us this signal. On the other hand, inflation and certainly employment data has given them absolutely no reason to back away up until this point. So, you know, we're hypercritical of a Fed that actually has started to regain some credibility, to your point, by keeping a pretty firm line and relying on the data. So my point is more, you know, if you do see the turn in the data, you are likely then to see Fed speakers start to adjust their tone. That's effectively what they've told us. It's just that we haven't seen this yet. And there's no guarantees that the CPI data today is going to be the one that that moves the needle. And let's not forget that the labor market continues to be incredibly tight and no signs of that changing either.
Mimi, what's a bigger swing factor, some of the data softening or a potential China reopen?
Oh, that's an incredible question. I think that China reopening has the potential to play into global growth. And as a consequence, that's probably a much bigger swing factor in terms of how global markets will react on foreign exchange overall. But the key thing here is that it has to be a credible sign around China reopening. So for us and our FX strategists, they're looking more around signs that there will be some vaccine rollout which would allow for that potential reopening. And to be clear, we would anticipate that markets would reprice that pretty quickly, and we've seen some evidence of that. But the potential for China reopening, the impact that that would have not only domestically but on global growth overall, and particularly in Europe, is really meaningful. And so as a consequence, I think that has the potential to have a big bang effect, far more than potentially the pivot from the Fed. So I think you make an excellent point.
How willing, you know, in speaking to clients, are they to take this bet? Because, you know, as you say, China officials do come out, say we're committed to COVID zero, but then, you know, you have Olaf Scholz in China talking about an mRNA vaccine. How are folks interpreting those cross currents?
And I think that's incredibly difficult for them to navigate right now. The key thing is that nobody wants to miss this trade if and when it comes. And so that's some of the price action that you've seen during the course of the last week or so has been people trying to interpret some of the signals that we're seeing and then adjusting thereafter. But clearly, if the move does come, as we said, it would be meaningful. To go back to this point on liquidity, you know, yesterday, for example, volumes were approximately 56% of what they've been over the last 7 days. That gives you a sense of how liquidity sort of dries out prior to these pre-data events. And so as a consequence, it's really difficult for you to come in and out of these trades. And so investors are, I think, being a little bit more cautious. You know, positions are much lighter than they have been through the rest of the year. And until you get a very firm signal, I'm not sure that people will commit capital. It's also as a consequence of the fact that we're in November. You know, the idea of trying to commit to a very big tactical trade at this point with the liquidity conditions, I think isn't necessarily as compelling.
Mimi, really fascinating stuff. Really appreciate your time this morning. Barclays co-head of Global FX Distribution, Mimi Rushton there. Enjoy the rest of your day. Now, coming up, crypto's wild ride. We're going to look into the Binance FTX saga and potentially what it means for these wider markets. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Danny Berger in London. Cryptocurrencies have been on a wild ride this week as the FTX Binance saga has unfolded. Bitcoin at one point fell to a 2-year low before paring some of those losses. This all came after Binance also pulled out from funding from buying FTX. The FTX co-founder warns that the beleaguered exchange is on the brink of bankruptcy. So how should we be thinking about all of this? Let's bring in Glenn Goodman, crypto consultant at eToro. Glenn, I kind of want to start with the simple thing here that is perhaps the most confusing to me. In a crypto exchange, how does an $8 billion hole appear?
Well, that's the $8 billion question, really, isn't it? The problem at the moment that we have is that there isn't full transparency. And actually, a lot of exchanges, or some of the biggest ones anyway, have come out today and yesterday and said, we need more transparency. Binance has said that they will provide evidence of their reserves. And I get the impression that that evidence might even be in real time, as in you'll be able to see how much money they've got all the time. Crypto.com have also come out. They're the ones who were promoted by Matt Damon. They've come out and said something similar, saying that they're going to publish their reserves as well. But as for FTX, it might be a little too late for all that transparency. We could have done with it 6 months or a year ago.
What is the risk in that there are more FTXs in the world? That, you know, Crypto.com, Binance, yes, they say they're going to publish it, but what is the risk that there are other exchanges with similar issues when it comes to not having the reserves to back up what clients think they have on these exchanges?
It's a big risk, frankly. This is the problem, is that we've always known that a lot of crypto exchanges, being unregulated, were a law unto themselves. Some of them, like Coinbase, for example, are actually listed on New York. Well, that one's listed in America on the New York Stock Exchange. And of course, it has more scrutiny as a result, and it's properly audited and all the rest of it. There isn't exactly the same kind of regulation that there is for stock exchanges, looking at all the transactions and so on. It's not quite as granular as that, the way that it's currently set up, but I wouldn't be surprised if something along those lines came along in the future. But in the meantime, you know, we have this situation where some exchanges are a lot more heavily scrutinized than others. FTX, though, was a real standout in the sense that it was one of the biggest exchanges based in Antigua. Yeah. Very little scrutiny, and the only comparable one is Binance, the company that obviously tried to buy it and decided not to, got cold feet.
I gotta wonder, okay, even if it's a standout in terms of less scrutiny, it's also a standout in sort of the cult-like following that Sam Bankman-Fried had. I mean, he was held up again and again. We talk about him about being the John Pierpont Morgan of the crypto world. He was the one who bailed out the industry when Luna crashed. Even if other exchanges aren't as vulnerable, what does this erosion of trust, especially in a figure who was seen as very trusted, mean for the industry as a whole?
What really winds me up about all of this is that it's completely antithetical to the decentralized ethos of Bitcoin. The very reason that Bitcoin was invented in the first place was to try and get away from trusting, big centralized corporations, or particularly big centralized billionaires, believing every word they say. The idea was to have a currency that was decentralized, that nobody was in charge of, that is trustless in the sense that you can trust the algorithm, but you don't have to trust any human being. And yet here we are all these years down the line, and the crypto dream has descended into this situation where people were trusting a billionaire. I'll read you out what one major crypto influencer with a load of followers was saying. Said, I can't believe it. We trusted FTX because it seemed safe. Families trusted this exchange with their money. They promoted it across a damn stadium. I can't believe what's happened. It's just hit me. It's like, guy has spent the influencer I'm talking about, has spent his entire career basically believing in decentralization and going, yay, decentralization. And now he's like, oh, I can't believe the billionaire wasn't 100% straight with me. I mean, for heaven's sake, get real, everyone.
Glenn, and it's not even just sort of, the crypto enthusiasts of the world or someone, spending money that they saved up from COVID. I mean, these are some prominent investors who put their money behind this one man. I was looking at a Sequoia blog post. You came with receipts. I got them too, Glenn. They were talking about their first meeting with him over Zoom, and they had people typing, I love this founder. I'm a 10 out of 10. Again, this was on a Sequoia blog post that they've now had to put a little disclaimer over saying that they've written down their entire holding to zero. So what happens to the crypto industry when you get Sequoia, Tiger Global, Thoma Bravo, these big names now with egg on their face by trusting in FTX?
I think you're going to have a situation in future where people are going to be a little more cautious, famous people I'm talking about. And frankly, that's a very good thing, because during the craziness of last year, when you had the likes of Tom Brady and Gisele Bündchen and Matt Damon and all these others basically being the faces for major crypto exchanges, companies that didn't even exist a few years ago, let's not forget. And these, top people were representing them. It wasn't a healthy situation for the industry as a whole. It had grown too far, too fast. And Sam Bankman-Fried was a perfect example of that. The guy was so green in sort of business sense that he still looked like a student, dressed in his t-shirt with his curly hair and his short shorts, sitting next to Gisele Bündchen. It was a difficult image to assimilate because it was a very strange and kind of cinematic situation, not realistic.
Hey, Glenn, I want to bring in Maddie Greenspan into the conversation, who just is joining us now as well. Maddie Greenspan, of course, Quantum Economics CEO. Maddie, I don't know how much you've been able to hear of mine and Glenn's conversation, but there's a lot of energy going on right now, so you gotta step it up, you gotta meet it. But Glenn and I were just talking about this idea of what does this do to the industry as a whole, with prominent investors who have egg on their face, with a trusted founder who is perhaps no longer a billionaire. What do you think the fallout for the crypto industry will be from this episode?
Yeah, thanks. Good to meet you, Glenn. Also, I was sitting in your seat just 2 years ago. So, yeah, I mean, I think that this is kind of a self-inflicted wound on the crypto industry, but also very necessary to heal itself. The promise of crypto is to have a decentralized and trustless system. And it seems that there was way too much trust being put in the wrong hands. The entire episode started about 2 weeks ago when SBF started meddling and lobbying for regulations that might have benefited him, but been bad for the industry as a whole. And people started calling him out on that. And then, of course, things really blew up when CZ Binance publicly dumped the FTT tokens. I think that the FTT losing its value is not as bad as the massive amounts of withdrawals that happened. People basically voting with their money saying, we don't want to be in FTX, we don't want to be involved in this place anymore. But then also all of the FTT value it was leveraged, and there was other things that they bought based on that value. So it was it's just a catastrophic event.
Maddie, and and Glenn, I want to ask you about this too. But Maddie, you just made a point that I want to press you on this idea of lobbying. SBF was a pretty prominent figure in lobbying. He reportedly invested around $400 million in the run-up to the midterms. In general, does the crypto lobby lose some of its bite and then potentially get less favorable regulation going forward because of just this one individual episode?
You know what? What the U.S. regulators decide to do is up to them. Certainly, crypto is a more pristine system. The idea that we can operate with smart contracts doesn't need as much regulatory oversight as traditional banking, where those type of things tend to happen. But exchanges that are centralized, as we can see, certainly do. The United States is falling behind in crypto innovation in a very big way, and that's largely due to regulations and the messed up incentivization structure that politicians have in Washington.
Glenn, what do you think? What do you think the future of regulation looks like? Do you agree with Maddie there?
Yeah, up to a point. I think we do need more regulation. I think the regulation needs to be the right kind of regulation. And this is always the problem with crypto regulation, is that the devil is in the detail. So pretty much the whole industry is in favor of, you know, more bringing within the financial fold and no more of this kind of uncertainty about whether a crypto is even a security or not. And, you know, because founders find it very difficult sometimes to know whether they're on safe legal ground. So certainly there are a lot of areas that need clearing up, but obviously we don't want the industry to be squashed flat at the same time. It needs to be sort of nurtured in a healthy way. And that means crafting regulations very, very carefully. The other thing that we could say about regulation, though, I suppose, is that in the aftermath of this, we've already heard Gary Gensler talk. There's going to be, you know, more of a drumbeat for regulation to get it tightened up for exchanges. And that's not necessarily a bad thing to some degree, because the ones that aren't regulated at all, you know, are really dangerous places. And I warned about that in a book that I wrote about crypto trading 3 years ago. I was like, don't keep much of your money on any one unregulated exchange, because you simply can't trust them. You don't know what's going on behind closed doors.
But do you think that Gary Gensler is smarter than you or me or any of the other million people talking about crypto on social media today?
No, I don't. No, I don't think he's smart.
Who is he to tell us what to do and what not to do? Honestly, this is.
Hey, listen, you know, it is something that is clear that it is a headache for regulators to figure out, right? There's a lot of different voices that I think is just evident by the both of you on its own. I mean, look, let's wrap this up. We got less than a minute to go, so let's see if we can break this up in 30-second answers. We'll do our best here. Maddie, is this the end? Is this final capitulation for Bitcoin?
I believe that this is the final capitulation on this leg of the cycle. If we go by the 4-year cycle, if that plays out again, we're about 357 days left to the halvening. So yes, this could be the bottom.
All right, Glenn, you got literally 30 seconds.
Yeah, I also think that this is the capitulation, but looking at past capitulations in 2018, 2020, when you get the massive volume of trading like we've seen over the past couple of days, it doesn't necessarily mean you're right at the bottom. There could be more days of sort of winding our way downwards until a proper base is formed, which will be the basis for the next bull run, whenever that comes. It could be months away, it could be years away, but you can be pretty sure of this. The crypto industry is big and established now. It'll be back.
Thank you both so much. I wish we could literally talk all day. I'm so sorry, Maddie. We are up out of time. We're heading into a commercial break. Thank you both so much. Maddie Greenspan there and Glenn Goodman of Quantum Economics and eToro, respectively. Coming up, we're going to get back to the election, the midterms. President Biden, he's seeking re-election in 2024. This is Bloomberg. Contagion or contained, the crypto rout pauses, but FTX warns of bankruptcy after Binance bails on a takeover. Sequoia writes down the entire value of its stake in the exchange. Inflation in focus. Europe follows Wall Street into the red ahead of the crucial U.S. CPI data. The Fed's Evans says it's time for the pace of rate hikes to slow. Plus, 2024, here we come. Joe Biden says he plans to run for re-election even as House and Senate races have yet to be decided following Tuesday's midterms. Good morning. Welcome to Bloomberg Surveillance. This is the early edition. I'm Danny Berger in London. Well, it is official. We have the first email from Musk to Twitter staff. And what is in this email? Musk, according to people familiar, has said that there will no longer be remote work. In this email, again, reviewed by Bloomberg News, said that there is no way to sugarcoat the message about the economic outlook and how it will affect an advertising-dependent company. But remote work is over. Let's turn now to the UK. And estate agents say inquiries by potential home buyers dropped for a sixth month. The Royal Institution of Chartered Surveyors Index measuring sentiment from new buyers dropped to a negative 55% in October from a negative 36% in the month before. That matches the low recorded during pandemic lockdowns. I'm pleased to say joining us now is Tarrant Parsons, senior economist at RICS. Tarrant, thanks so much for joining us this morning. So look, it's clear there are cracks in the UK housing market from this survey that you've put out overnight, but how deep are those cracks?
Well, at this stage, our survey data is signaling that the housing market continues to weaken. So we've already seen for a few months now that buyer demand was falling alongside the number of sales being agreed also in decline. But in recent weeks, it does seem that this kind of downward momentum really has kind of gained some further traction. I think a large factor kind of driving that is, of course, that the real jump in mortgage rates that we saw initially after the mini budget. This has calmed to a certain extent, following U-turns on the measures, new Prime Minister, new Chancellor, but still current interest rates are much higher than what they were 3 or 4 months ago. There's also the likelihood that rates still have a little bit further to rise from here. So I think that's the most crucial factor in weighing on housing market activity.
Given mortgage rates have moved higher, is it to a point where the average wage earner is now being priced out of this UK housing market?
I wouldn't say that necessarily. It's going to lead to a period of adjustment. Unfortunately, given that house prices are so high in the UK, when you do purchase with a mortgage, that does require quite a significant sizable kind of borrowing, and any increase in rates is then going to have a significant impact on your monthly repayments. So I'm not sure. Obviously, some more people are being priced out than before. I think it's just in a period of adjustment right now.
So the market believes that the BOE is going to raise rates to 4.6% next year. What happens if that does play out?
I think 4.6% is kind of what is being priced into the markets right now in terms of the mortgage markets. I think that wouldn't be a kind of worst case scenario. I think mortgage rates are kind of reflecting that move. I know the Bank of England in their latest communication said that their policy rate probably wouldn't, or they don't think it will need to rise as much as financial markets are pricing in. So from 3% currently, maybe something like 4% it is thought more likely. But I think that's largely priced in now. I think the risks, really, the downside risks, if they were to materialise, they would come from more persistent, higher levels of inflation not being brought under control, and policy rates having to move above that level, I feel.
Okay. Tarrant, thank you so much for joining us this morning. Tarrant Parsons, senior economist at RICS. To the U.S. now, where President Joe Biden has celebrated what he's called a strong night for Democrats in the midterms, with control of Congress still up for grabs. The 79-year-old says he plans to seek re-election in 2024, and he's likely to make an official call early next year.
Our intention is to run again. That's been our intention, regardless of what the outcome of this election was.
Let's get the latest with Bloomberg's Josh Wingrove. Josh, what is the mood among Democrats? I mean, there seems to be this strange irony, I guess, of the expectation was this could be used as a launching pad for Trump's presidential run, and now it seems it's just the launching pad for Biden.
Yeah, I mean, we're sitting here and these results are still being counted, but it's going to be much better for Democrats than some people feared it would be. And when I say some people, I mean Democrats as well. Right now they're still counting the Senate votes. I think Nevada is going to be crucial if they hold on to that and hold Arizona. Democrats will keep the Senate. The House looks like it'll go to the Republicans, but by a much smaller number. This is good news for Joe Biden as compared to historical trends. I mean, presidents normally get sort of clobbered, halfway through their first terms, and so he had some spring in his step in that press conference. The "we will make a decision" that you heard there is a reference, of course, to First Lady Jill Biden. So he's saying in the coming months they're going to make that decision. You haven't had really widespread objection among Democrats to him running again. It's more sort of muted or one-off type of comments, people saying that he should basically do what he wants to do. The question is what people will say behind the scenes, whether that's the First Lady or someone else, but we'll find out in the coming months. But all signs right now point to another campaign by President Biden.
Yeah, Josh, speaking of the coming months, can you kind of walk us through where we go from here? There are obviously some races that we still don't have tied up, that Georgia, for example, moving to a runoff. What does the calendar look like from here?
Well, if Nevada and Arizona come in for the Democrats in the coming week, that kind of settles things. That gets them to 50. Now, there'll still be that Georgia runoff in January, but it won't determine control. And I think Democrats will probably like their chances a little more in a race that doesn't actually swing the chamber. They figure Republicans might not bother to put up as much of a fight, perhaps. But Republicans, of course, see an inside lane to try to win that seat as well. So who's to say? But it doesn't necessarily have to come down to Georgia, is I guess my point. Now, with the House, if it does go to the Republicans, as seems to be the case right now, although we shouldn't rule out the sort of probably slim possibility that Democrats eke something out, then the question is, what might they do before the new Congress starts in January in that so-called lame duck session? There's a few questions hanging over that. One is codifying protections for same-sex marriage. Another is raising that debt ceiling so it can't be used as leverage and other stuff. And then the sort of third broader one is this question of Ukraine aid, which Republicans are starting to balk at providing. So those will be the three buckets that we'll look at in that lame duck session before we go back to what looks like a divided Congress. But again, a better outlook for Democrats than is typically the case in midterms, and then that's why you're seeing Joe Biden sort of, wink to the camera and talk about 2024.
Josh, thank you so much. Really appreciate all of your work this morning. Bloomberg's Josh Wingrove there. Coming up on the program, Europe's top renewable firm plans to allocate some $17 billion towards green energy. We got more with the Iberdrola chairman, Ignacio Galán. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Spain's largest utility giant, Iberdrola, says it will focus on growing its electricity network over the next 3 years in a $47 billion push that also seeks to expand green energy sources. We're joined now by Iberdrola chairman, Ignacio Sánchez Galán. Ignacio, thank you so much for joining us. So 47 billion euros, no small chunk of change. A lot of that is going towards clean energy, and much of that is going towards the U.S. You can hear my accent. I have an American bias. What's your American bias? Why the U.S.?
Well, first, because our presence in the United States is very broad. I think we have already the distributions of New York, Connecticut, part of Massachusetts and Maine. Now we have as well a deal agreed with PNM in New Mexico and Texas, and which is mostly related to grid. I think in renewables, we are one of the three largest for many years. We have presence in 23 states. And I think that makes that in this moment, the United States is already providing a framework of predictability, stability, and attractiveness. So
does that mean in Europe, in the UK, you don't have that stability, that framework?
Well, I think it's a stability, but I think it's the opportunities which is already given in this moment, United States are great. I think it's traditionally already the ITCs and PTCs, the tax credit system. Now this already extending that one for a period of 10 years, with that gave already this predictability. They are already introducing certain incentives for electrifying the economy, either in terms of green hydrogen or either in terms of the of the networks companies, which is already providing extra funds for expanding our grid or giving extra funds for electrifying and providing a means for electric vehicles. And I think that makes a need for ourselves.
Yeah. I mean, that question might have been a bit leading on my part because I kind of was getting at this idea of the windfall taxes. You have it in UK. Spain has proposed it. What do you make of it? What does it mean for your investments?
Well, I think we are in a very tough crisis. So, and I think in this crisis, there are someone else which are already obtaining extra benefits, which are not opposed, and the people and the companies have money, which I think is that's great. But I think if they are already something as consequence of this one, it's fair then contribute with that one, which I think I'm not opposed to make a contribution on this windfall profit if those windfall exist. So I think it's clear that the oil and gas companies, they are already having windfall profits. I think the cost of production of gas or the cost of production of oil or the cost of refining the oil is not really increasing as much as the prices are increasing. And I think you see the accounts of these companies, which is already booming. Even the CEOs of certain of those companies are saying the same thing that I'm saying now, is they are ready to contribute as well in that.
Okay.
What has no sense, what is no sense, is to ask for contribution of those companies when you have not really having any excess of profits.
Okay. So that is the difference there, the distinction that you're trying to draw. So given that, do you change your investment outlook in these places?
Well, no, I think you mentioned that we are investing, the first destination is networks. Networks is a regulated activity in the countries. Networks is the base for providing a proper service to the citizen. Networks is the base for connecting the renewable, which is desperately needed to diminish the external dependency of the different countries on fossil fuels. And I think that is not already related to that one. Networks by nature is already a predictable thing here in Britain. We are now negotiating the Rio ED2 for up to 2028. So I think terms, what is we are discussing is terms which are logic, reasonable, and stable. So I think it's more the need of continue providing this essential service, which is electricity to the citizens. And I think now it's required, we are putting our resources for that one.
Right.
The decision is taken more in another side of the things which are not related with networks, which is related with power generation in general.
The other debate that is unfolding in Europe and specifically the EU, and it does seem that it's caught up sort of the entire energy package debate, is one of a gas price cap and energy price caps. How would you like to see this debate play out?
Well, look, I think all the markets are marginal by nature. So we have already talked too much about the marginality of the electricity prices. We are not talking about the marginality of the gas prices. The fact in Europe, so we have already the TTF, which is the Dutch market, which is mainly managed by the prices of Russian gas. So it has not much to see with the prices which exist already in the case of the south of Europe, the mid gas, which is the price which is more based in liquefied gas, or the price of gas in the Far East, which as well is based on this one. So I think to try to introduce some kind of measure on that one looks already logic. So and I think even in these terms, what is being introduced in some European, with the European framework is fine. So I think what Europe is already saying is that gas is responsible of the prices we are paying. So it has a logic to put certain kind of cap of the electricity prices related to this one, which has a logic.
Right.
But what has not a logic is each country can do whatever they would like, independently of what is the situation. And I think it's all across Europe. The rules are common rules for everybody, it's fine. But what is not normal is in one country we are being charged in taxes on this one, another country is already subsidizing.
Do you fear that a lot of the European unity is starting to break down?
Well, really, it is not reinforcing. The singularity is not reinforcing the unity. So I'm already pro-European. All my life I've been defending Europe since I was a young student. And all things which is not going in the direction of more unity and more common rules. And I think precisely is not already the right direction that I was dreaming when I was a young student, dreaming to be European.
I'm afraid we're going to have to leave it there on the dreams of young students. Ignacio, thank you so much for joining us this morning. We appreciate it. Iberdrola Chairman Ignacio Sanchez Galan. Now let's get over to the Bloomberg First Word News. With that is Leanne Gerrans. Leanne.
Danny, good morning. President Joe Biden says the Democrats have had a strong night in Tuesday's midterm elections and that the predicted red wave for Republicans didn't happen. The GOP is currently inching towards control of the House, albeit with a narrower margin than was actually predicted. Meanwhile, Democrats have had a path to keeping their Senate majority after they gained Pennsylvania. Control will come down to 3 close races, which are still to be decided. Now, Russian troops have been ordered to withdraw from Kherson, the southern Ukrainian city that was the first major urban center seized by Vladimir Putin. In a televised briefing, Russia's defense ministers told the command of Moscow's forces to pull out of the city and regroup on the other side of the Dnipro River. This after Ukraine's troops pressed forward with a counter-offensive. Now, Allianz has announced a new share buyback program of up to €1 billion after it reported its best third quarter profit on record. The Munich-based insurer said income from property and casualty insurance outweighed weaker results from asset management.
We continue to look at what could be out there, which could be of interest, but at this point in time, we are also very focused on buyback because we believe that buying our stock at this point in time is a very good choice.
Apple has restricted the AirDrop feature on iPhones in China after it was used by protesters to spread images to other phone users. AirDrop allows a quick exchange of files like images, documents, and videos between Apple devices. Apple's latest operating system for iPhones sold in China caps the time window for receiving files from non-contacts at 10 minutes. Now, the company says it plans to roll out that change globally. And Parisians and Londoners will face similar chaos trying to get to work today as public transport workers go on strikes over the rising cost of living. Transport operator RATP says travel will be completely interrupted on 5 metro lines out of 16, with disruptions on most other services. Transport for London is advising people to avoid the tube after talks with unions over pay did break down. And that's your Bloomberg Business Flash. Danny, check before you travel. That's what they say.
That's the smart thing to do. But Leanne, I got no idea how I'm getting home today.
Me neither. Maybe we'll have to do a little joint walk.
Looking forward to it. Leanne Gerrans there in London, who I'm sure now is changing into her running shoes so we can go walk out of here hand in hand together. All right, coming up, crypto's wild ride. We're going to look back into the Binance FTX saga and what it means for markets. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Danny Berger in London. Cryptocurrencies have been on a wild ride this week as the FTX Binance saga has been unfolding. We saw Bitcoin at one point fall to a 2-year low. It did pare some of its losses. But of course, there's still the question of FTX. Binance has pulled out of buying it. The leaguered exchange is on the brink of bankruptcy, Sam Bankman-Fried warns. Joining us now is Bloomberg's JP Barnett. JP, one of the big points of contention that we've been talking about on the show is contagion effects. Is it contained or is it contagion? Do we have any clearer read on that at this point, nearly 10 a.m. London time on Thursday?
Well, in general, I would say it's a thing of the cryptocurrency world of its own, and we are very lucky that this is happening in these times and not 10 or 15 years ago, because I would bet that some banks would be involved there as well with like loans or something like that. For the moment, it's a cryptocurrency thing, but of course there are secondary effects that probably could like have a ripple effect on the market. We don't know like how many customers have lost money there. Is it savings, or have they put money into the exchange from credit card debt? So will big banks see higher default rates there. So these kinds of secondary effects we can watch out for, and we're not sure if they are coming. And then also, it's not good for risk sentiment right now. I mean, the market is still fragile. We have a difficult year, and a story like this is not helping risk asset managers. It's not helping risk sentiment, and it also is a problem for the retail folks who are very active in the cryptocurrency space. So maybe they have to sell some equities here to cover the losses.
But at the same time, we are seeing Bitcoin and basically all the other cryptos bounce back this morning. JP, what do you make of that?
Well, I mean, cryptocurrencies is super hard for me to say what's really going on there, because you always have this kind of, oh, now it's cheaper again, let's buy into it, this kind of gold rush of people who hope to become the next crypto billionaire or millionaire or whatever. So it's very hard to say what the daily moves are doing. This is probably not a thing that is over today, so I would be careful to buy into the market at this point.
Where do you look for in terms of if there is some spillover effect? What does look most vulnerable? About less than a minute here, JP.
Well, I would say like everything that is high risk, because this is also under pressure in general in the market. So if we have a ripple effect here from people trying to sell assets that they still have, I would look out for everything that is like tech-driven, high growth-driven, because these assets are very vulnerable, and I would guess that people would sell them first.
Okay, JP, thank you very much. Bloomberg's JP Barnett there. And yes, with crypto rebounding, again, Bitcoin, it's up some 6%. You are seeing U.S. futures. They are doing better this morning. But again, the big driver today might be that CPI figure. Markets are expecting some of the inflation, some of the consumer prices to be coming down. Could it surprise to the upside? Or where's the bigger tail? Could it be to the downside, considering this market has been so long the dollar, considering that yields are still pushing higher today? Your two-year yield is up 4.5 basis points. Well, Bloomberg Surveillance Early Edition continues in the next hour. This is Bloomberg.
How people feel about the economy and what it actually is doing are two completely separate things.
I think this market is showing that it's discounted most of what expecting.
We've seen this really big shift in sentiment.
Bitcoin's been weak for so long that actually it's really something we're not too worried about. And I guess maybe it's more on the kind of retail side.
We need to have strong global standards to make sure that there are no gaps in the international regulatory framework.
This is Bloomberg Surveillance Early Edition with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. Crypto exchange FTX says it needs up to $8 billion to avoid bankruptcy. JP Morgan says crypto investors face a cascade of margin calls. New data out today looks likely to show inflation in the U.S. moderated only slightly last month. What would that do to the Fed's downshift from steep interest rate hikes? And the battle for control of the U.S. Senate comes down to races in just 3 states, and one of those is headed for next month's runoff. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. Kailey Leinz is making her way back from assignment, of course, in Philadelphia. And Matt, in terms of market reaction, we're definitely focused on the crypto story, but from a macro perspective, looking for fallout there, but also focusing on inflation.
Yeah, well, we've seen fallout from the crypto story into things like the S&P 500. Yesterday was off on crypto woes, into things like the 10-year auction. Peter Cheer said it was a horrible auction, and part of that is due to the drop in crypto. So it's definitely causing a little bit of contagion in broader markets. In terms of what we see in Asia, I think this has a lot more to do with a reversal in sentiment around COVID zero policy. We saw some big rallies in Asian markets throughout October because of optimism that China might turn around on its COVID zero policy. Now we're seeing increased lockdowns after more infections spread across places like Beijing and Chongqing. So we have the MSCI Asia Pacific down 1.2%, the Hang Seng down 1.7%. It had been worse in the session, didn't close at its lows, but nonetheless, a loss of almost 2% there. The Nikkei down 1%. This will be interesting to watch. What happens to the Nikkei? What happens to JGBs? What happens to the yen after we get the CPI numbers, because that is something that truly could move assets globally. You can see the yen right now trading at 146.43. Take a look at what's going on in the U.S. We're seeing futures recover a little bit from the down day after Sam Bankman-Fried revealed that FTX could need $4 billion, possibly $8 billion, or it'll have to file for bankruptcy. That'll leave a lot of customers in the hole. Could be leading to a cascade of margin calls, according to J.P. Morgan. The U.S. 10-year yield had been down throughout the early morning, down to about 406 at its lows. Now it's coming back higher, about 1.5 basis points to 410.77. But remember, on a day like today, when we get such an important piece of data out, when I see Mike McKee in the office at 4 o'clock in the morning, I know traders are going to sit on their hands for a while until they can try and digest and translate what's happened. NYMEX crude down 1/3 of 1%, 85.53, just so you know. And Bitcoin, which had dropped below $16,000, back up a little bit at 16,652, but still a long way down from the 21,000 that we had seen before this whole FTX explosion happened. Anna, what do you see in Europe?
It's mixed here in Europe. Yes, I wonder what the correlation looks like between how early Mike McKee starts work and the macro significance of the day ahead. Certainly high today when we look ahead to that inflation print out of the US. This is the mixed picture for Europe then, Matt, as we wait for that inflation print and we focus on the fallout yesterday on Wall Street from the crypto story, and that is still rippling through, of course, around the world. Went through the Asia session, as Matt pointed out, came through into the European session, and we're weaker a little bit at the margin on some of these European markets, down by 0.4% over in Paris. Let's have a look at some of the details, some of the sectors and the big names that are moving things around here, and also mention what's going on with Brent crude, because it's actually retreated quite substantially in recent sessions. 92.43, down just 0.2% today, but down substantially in yesterday's session. The US stockpiles number, also the Chinese COVID count, all of that adding up to a difficult picture when it comes to oil demand. Credit Agricole in the French banking space. The banking sector is weak today. That's one of the sectors that we're focused on. That particular stock down by 4.2% for banks. And it wasn't necessarily the top level numbers, which didn't look too bad when you compared them to estimates. Some areas of revenue came short of expectations. But when you look at capital levels, RBC and also Credit Suisse analysts both raising this as a concern. And so that company is down by 4.3%. Centrica, the owner of the British Gas, a supplier of energy here in the UK, up by 7.7% as they talk about returning more money to shareholders. That's interesting timing ahead of a winter that could be difficult, of course, for many, and is no doubt going to attract political attention. Teleperformance, I put this in because it's the biggest faller on the stock 600 today, Matt, listed over in Paris, down by 34%. Other media reports talking about poor treatment of labour over in Colombia. The company, Bloomberg contacting the company, trying to get comment out of the company. No comment just yet, but I put it in here because the size of the move is substantial for a company listed on the stock 600.
Well, and because we're playing to a global audience, I mean, what a truly international story. Thanks very much for that, Anna. Now, cryptocurrencies have been on a wild ride this week as the FTX Binance saga unfolds. Bitcoin fell to a 2-year low before paring some of its losses after Binance pulled out from buying FTX. The real problem, of course, has nothing to do with Binance. It's all about Sam Bankman-Fried, the founder of FTX. He says the beleaguered exchange is on the brink of bankruptcy and could need $4 to $8 billion, basically begging for a bailout. Bloomberg spoke with prominent names in the crypto industry on the fallout.
It looks like FTX might be heading into a bankruptcy process, the likes of which, we've seen frequently recently, unfortunately.
Many people are saying, is this a Lehman moment? Are we looking at 2008?
In real time, that investors are getting hurt.
We would actually withdraw some money or tokens from the exchange if we could right now. But, I'm not too worried. It is an excellent platform.
I don't think there's going to be value there, anything close to what the whole seems to be.
Sonali Basak, our global finance correspondent, intrepid crypto reporter as well, joins us in the office. Unbelievable, right? What do we know about how Sam Bankman-Fried effed up, in his words?
Yeah, he did tell investors that, and he would be extremely grateful, he asked investors, if they would step in and help fill this hole. It's an $8 billion hole in FTX's balance sheet. That is bigger than the size of Robinhood's entire market value. And remember, last year alone, they raised $2 billion in 6 months from investors, from Sequoia, who had marked down the value of its entire stake and had doubled down on its bet. Skybridge was in many levels of series rounds here here. The Paul Tudor Jones family was in other rounds as well. There's investors really around the globe that were exposed to this. And so, listen, going back to investors is very difficult. He'll need about $4 billion, according to our reporting. And whether he can get that or not, he would likely have to file for bankruptcy protection if he can't get that money. There's a lot of question about the ramifications here for FTX and the industry at large. I think Jim Bianco put it well in a call we had yesterday, that there's a real risk here that dozens of firms will fail on the back of this, given that they had their accounts with FTX. So you have consumers both on the institutional side, potential miners, brokerages that may not be able to get their money back, as well as customers who have lost billions of dollars here. So unless the industry came in and bailed them out again, remember, this is why JP Morgan thinks that there's going to be more risk here at play and more margin calls. There's a real risk here that there is nobody to save the day for FTX, meaning others will feel pressure from this.
Yeah, and of course, FTX was the one bailing others out over the summer, and now they're the ones in trouble. And now this is attracting regulatory scrutiny. We already know the DOJ and the SEC are looking at what's happened here, whether there's been mishandling of customer funds then, Sonali. But what about from a broader regulatory perspective? A lot of eyes on this business, on this sector now.
Yeah, from the enforcement perspective, you had mentioned the Securities Exchange Commission, CFTC, also looking at this, the Department of Justice. I think it's really important to track just not only the consumer funds. I think that CZ actually put it interestingly himself from Binance, which is to make sure that when you're using leverage here, not to use your own coins as collateral. We were talking with this with a lot of folks yesterday. The FTT token itself might come under scrutiny here, given how it was used and what happened to it at the end of the day. So the SEC and all of its rulemaking, let's see how quickly they can get things through. We know lawmakers in Congress have been taking a look at this. There might be more push to make rules faster, given how much money has been lost for consumers, billions of dollars this year, and very few actual rules, Anna, have been made.
All right, very interesting. We're going to obviously keep incredibly focused on this story, and the fallout in terms of regulation, I think, will be fascinating as well. Maybe it's a clue when everybody involved is in the Bahamas or offshore, right? Sonali Basak is going to join us as well. Kailey Leinz and I for a special 1-hour edition of Bloomberg Crypto. That's today at 1 p.m. in New York, 6 p.m. in London. You don't want to miss it because the contagion to broader markets is evident. It's not just about these little ones and zeros that teenagers are trading back and forth. Now, investors are bracing for the latest U.S. inflation report today. Speaking of contagion, CPI is expected to have slowed only slightly, and that's the result of a survey that's been wrong 11 out of the last 12 months. Joining us now is Bloomberg's Michael McKee. Mike, economists consistently underestimate inflation. Typically, we see big beats here. Do you think we're going to see that as well today?
I think we're probably getting into the territory of maybe not, but I'm not going to promise anything. I don't think we're going to affect the crypto markets too much with CPI, but currencies around the world and, of course, the U.S. bond market could get a big hit if we get a higher than expected number because, of course, it means the Fed has to do more. Here's the survey. As you can see, the headline number is supposed to increase on a month-over-month basis. Food and energy at fault there. The core is supposed to decline a little bit, and that's what the Fed would like to see, especially the month-to-month. A year ago, inflation was still rising, so the year-over-year numbers don't mean as much to the Fed as wanting to see a sequential decline in monthly inflation. Not sure if they'll get it, but there are some signs and portents to follow. One is that apparel should drop because of big inventories at retailers. Used cars, wholesale prices have been down for a long time, so we do expect sooner or later that's going to fall. Some construction supplies may come in a little bit lower. Rent and home prices, though, still rising. That's going to take a while to get into and out of the CPI. The Fed does know that, though. Bloomberg Intelligence says that it may be cresting. This might be close to the top for the rent and home price increases. And then there's a statistical quirk that should bring health insurance down by a lot, and that should keep going. So maybe that's a reason we will start to see inflation on a month-to-month basis fall.
Yeah, remind us of the backstory around shelter. You mentioned home and rent costs there, Mike, and it isn't a very simple system, it seems. The way that the prices people pay for the places they live gets into the CPI data is a bit more complicated. Shelter is 31% of the CPI basket, I was reminded yesterday. This has a big impact. If this remains sticky, it has a big impact on that inflation print.
Well, it's going to remain sticky. The way they do it is to ask people who own homes what they think they would pay to rent their house out. And obviously, that's not something you think about every day, especially if you owned your house for a while. And then in terms of rents, you don't rent a new apartment every month, so it takes a while for this to get in and out of the data. Now, private firms show that rents have been going down, but that's going to take a while to show up. I might point out to Matt and Anna that you talked about how this could affect global markets. The Prime Minister of Japan met with the Finance Minister of Japan this morning for a briefing on U.S. CPI.
Yeah, obviously it's a very interesting number, important data point for everybody around the globe, and certainly the Japanese are in a very specific position that we'll be following closely. Mike, thanks so much. Michael McKee here covering the inflation story all day long. Let's turn to politics now. Control of the U.S. Senate comes down, as Anna said earlier, to just 3 races where votes are still being counted. Georgia, Arizona, and Nevada, each party needs to win 2 of those states to secure a majority. Jack Fitzpatrick of Bloomberg Government joins us now from Washington with the latest. So, Jack, when will we know?
Well, we're not going to know the control of the Senate for a while because we're headed to a December runoff in Georgia. And unless either party can win Nevada and Arizona and go 2 for 2 there, then it's going to come down to Georgia. So I should say we're not likely to know for a while, but the final votes take a little while in Arizona and Nevada. So it's really a slow trickle to see if either party can get both of those states. And again, if they're split, then we're going to be waiting into December. And it would be very unpredictable to see exactly how the knowledge that the Senate majority comes down to that race plays into the campaigning in Georgia for that. So right now, it's a really extreme game of wait and see in D.C. to figure out who's got the Senate majority. And it really looks like somewhat of a toss-up.
Okay, and we might have to wait weeks then. Let's think about the wait for 2024. President Biden has celebrated what he called a strong night for Democrats during the midterms. He also said he still plans to seek re-election in 2024 and will likely make it official early next year. Let's listen to what he said.
Our intention is to run again. That's been our intention, regardless of what the outcome of this election was.
So President Biden's intention is to run again, although the final decision will come after conversations with various interested parties. But we also wait to find out what it is that President Trump wants to announce a little bit later on. In fact, in the coming days. We suspect we know, though.
Well, we have suspected we know for a long time because Trump has been kind of hinting, not subtly, that he was going to announce his decision, seeming to announce that he was going to run for president next week. It's going to be interesting to see if he sticks to that schedule, because this has been a disappointing midterm for Republicans who expected not only to get the House, but potentially get the Senate, and we're hoping for a real wave. Trump was asked about this and acknowledged, he actually posted on Truth Social, there were some disappointing results. This does not reflect well on Trump's place in the party, and a lot of Republicans seem to be looking to Ron DeSantis, who won big, won very easily, and won with some key groups in Florida. So, Trump's decision really looms large over anything Biden does. There seems to be some sense that Biden sort of was made to run against Trump, made to beat Trump in 2020, and it's difficult for Biden to make, I guess, a real announcement regarding 2024 rather than just sort of that almost defensive answer without knowing exactly what Trump is going to do. But again, he back when the expectations were a bit higher for Republicans, Trump seemed quite clear that he was going to make an announcement looking at next week about 2024. We'll have to see if he pushes that off, because there is quite a bit of disappointment with the status quo and with Trump's place in the party following the results that we have seen.
Yeah, and with some of the performance of the people he backed. Jack, thank you very much. Jack Fitzpatrick of Bloomberg Government joining us there from DC. Coming up on this program, we'll talk to Ed Clissold, Chief US Strategist at Ned Davis Research. We'll keep an eye on crypto and get Ed's thoughts on the read across into other assets, which, of course, as Matt says, we've seen already. How far will that run? And talking specifically of crypto, we will get to that conversation with Aaron Kaplan, CEO of Prometheum, an SEC-registered market ecosystem for digital asset securities. What does he think went wrong at FTX? Plus, we're live from the COP27 conference in Egypt once again. White House National Climate Advisor Ali Zaidi joins the team. This is Bloomberg.
Welcome back to Bloomberg Surveillance, the early edition. We are simulcast on both Bloomberg Television and Bloomberg Radio. For those of you listening on radio this morning, I will walk you through a really cool chart that I have. Valerie Teitel put this together for us out of London. It just shows the incredible climb at the end of 2019, beginning of 2020 in assets like Bitcoin, but also a Goldman Sachs basket of unprofitable tech companies, and of course the ARK Innovation ETF. This is, skeptics say, what happens when you throw billions and trillions of dollars of money into the system, just flooding it with cash, printing money, and you get this froth in assets. It's all come crashing down, obviously, and Bitcoin, the most recent to join its I guess, brethren at ARK and the non-profitable tech index. My question is, does this signal a bottom in markets? We're going to ask that question to Ed Clissold right now. He is Chief U.S. Strategist at Ned Davis Research. And Ed, you know, we have seen the S&P come all the way down to 3,600, turn back higher to 3,800. Have we seen, you think, a bottom forming here?
Well, I think, well, first of all, that is a great chart, and people who know Ned Davis Research knows that's a really high compliment if we like the chart.
Yes,
but
thank you.
If you look at what happened in 2002 with the dot-com bubble, and then also in 2008, 2009, once things start to break, you can bloody your hands by trying to catch that falling knife. And it really required the Fed to step in and add liquidity before things truly bottomed. And we're talking about whether the Fed is going to be done raising rates, or they're just going to raise rates at a slower pace. So it's probably a little bit too soon to be calling a bottom, would be our view.
Yes, and so good morning to you, Ed. So I suppose the question then, it's a great chart, has a number of assets that have been sent higher by loose money and then come down as money tightens up. And then the read across from those assets in that chart into things that are not in that chart is really interesting to see. How much further downside do you expect to see for stocks in general then?
Yeah, so I do think there's a possibility of a year-end rally, but then as we move into next year, the risk of inflation, of a recession increase. And if you look at the average decline for the S&P 500 in a recessionary bear market, it's around 36%. And so that's a good benchmark to look at. So that would be probably the ultimate low for a broad stock market index. And again, it usually takes some time. The S&P has never bottomed before the start of a recession. So if we believe economists who say we're not in a recession right now, that would mean the low is likely not in place at this point.
What will you look for, Ed, when it comes to the CPI print a little bit later? How do you think the market is going to trade around this? We get used to inflation prints coming in higher than anticipated, but every month we're spooked by it.
Yeah, it is amazing how the market seems to get its hopes up, only to be dashed. But there are some positive things we're likely to see with goods prices coming down because of inventory, supply chains getting better. So I think there are some rays of hope. What we really want to look at would be things like the core CPI, the trimmed mean CPI, the median CPIs, and this is really more than just a few items that are rolling over it. That's going to be the key. The Fed's told us that, but I think also the markets have told us that we need to see more than just a few items rolling over. And I do think that the market can look past this owner's equivalent rent issue. That means that part of the CPI is going to be rolling over slower than maybe what's actually going on in the economy, because that's what happened on the upside. It went up slower than was going on in the economy, and the markets reacted negatively to it. So hopefully we can move past that part and see what's really going to be happening with inflation.
You know, Jerome Powell has been saying he wants to see real rates rise into positive territory, and I got another chart here that shows you real rates, or specifically the Fed funds rate minus the core PCE, which is what he has put forward as, his proof that he wants to see. We're not even close to there yet, still negative 1.15%. How long do you think it's going to be till we get a real Fed pivot?
Yeah, so I think you're talking about early next year. So the Fed could very well do 50 basis points in December, and then 25 of the first two meetings next year. So that'd be another 100 basis points. That would take us into March. And then if you get a rollover in inflation as well, then you could get positive. So we're talking about Q1 next year, most likely. So it's coming, but we're not there yet.
All right, Ed, thanks so much for joining us. Always a pleasure talking to you, and we appreciate Ned Davis Research any time of the day. Ed Clissold, they are talking to us about what to expect from markets, especially after this incredible crypto explosion that we've seen. Or maybe explosion is too strong a word. I will remind you, Anna, that I bought my first Bitcoin for $800, so it's still worth a heck of a lot more than that.
So you're doing fine.
Well, I mean, I instantly spent it. So let me give you the first word news right now. I want to keep you up to date with everything that's going on around the world. The Pentagon estimates well over 100,000 Russian soldiers have been killed or wounded during the war in Ukraine. The chairman of the Joint Chiefs of Staff, General Mark Milley, also estimates that there have been 40,000 Ukrainian civilian casualties. Milley says that a potential stalemate in fighting over the winter could lead to peace talks. That would be optimistic. Hurricane Nicole came ashore on Florida's east coast early today with a drenching rain and dangerous storm surge. The hurricane was a Category 1 with winds of 75 miles an hour when it made landfall just south of Vero Beach. It's now weakened to a tropical storm, and forecasters warn it could dump up to 8 inches of rain. Coming up live from COP27 in Sharm el-Sheikh, Egypt, White House National Climate Advisor Ali Zaidi. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Crypto exchange FTX says it needs up to $8 billion to avoid bankruptcy. JP Morgan says crypto investors face a cascade of margin calls. New data out today looks likely to show inflation in the US moderated only slightly last month. What would that do to the Fed's downshift from steep interest rate hikes? And the battle for control of the US Senate comes down to races in just 3 states, and one of those is headed for a runoff next month. I'm Anna Edwards in London with Matt Miller in New York. Kailey Leinz is making her way back from assignment in Philadelphia. And Matt, European equity markets, well, they're not doing all that much, really. Waiting for that US inflation print later, waiting for the next news lines on the crypto saga as well.
Yeah, I think we're definitely waiting for CPI. That's going to be a huge input to what the Fed does going forward, and obviously that means the market cares about it deeply. We do have futures up right now about 0.1%. So the truth is not moving a heck of a lot. But remember, yesterday we were down more than 2% on the S&P 500, largely because of concern surrounding Sam Bankman-Fried's FTX implosion and the drop in Bitcoin. Right now you can see at the bottom of the screen, Bitcoin actually rising almost 5%, but it had come down to below 16,000, and a week ago it was trading for 21. So it's been a long way down for Bitcoin over a very short period of time. That kind of volatility used to be normal in this space, but we'd come to rely on Bitcoin as just holding at 20,000 for the last few months. In terms of what we're looking at in U.S. yields, we were down to 406 earlier this morning. Now we're back up to 411.15 right now, climbing about 2 basis points, but clearly another market where traders are going to likely sit on their hands until they see that the CPI print. I will also point out that Peter Cheer yesterday said he was very disappointed in the 10-year auction, and a lot of that maybe had to do with the concern around crypto. So it's not just affecting the tokens. It's actually affecting a contagion into broader markets. And then NYMEX crude. You pointed out that we've seen crude come down. You were showing Brent earlier, Anna. Here's the New York West Texas Intermediate contract at $85.14 a barrel. So we really haven't seen a big uptick in that. But of course, it's the core number that the Fed cares about in terms of inflation. And this is considered a transitory price. What do you see in Europe?
Yeah, interesting to see the speed with which those oil prices are coming down. Still at elevated levels, of course. I've got Brent crude in here still, Matt, at $92, but it is coming down pretty fast, as if the Chinese narrative around opening, no, not reopening, that is sticking to energy prices, perhaps more than it's stuck to other assets. Other assets, though, a little range-bound this morning here in Europe, down 0.2% on the stock 600, waiting for clarity around the inflation picture in the United States. Will we see that little bit of moderation? What will that do to the Fed's trajectory? In terms of some stock specifics, we have Centrica up by 8.2%. The owner of British Gas, which supplies energy, of course, to many UK homes, they are talking about returning cash to shareholders, which no doubt will attract political attention. Teleperformance, a stock listed in Paris. It's the biggest faller on the stock 600 here in Europe. Very specific story around this company, but other media reports talking about poor treatment of workers over in Central America, in South America, and as a result, the stock under pressure. Bloomberg in touch with the company trying to get comment, of course. Matt.
All right, let's get back to the COP27 summit in Sharm el-Sheikh. UN climate talks there are well underway. And Bloomberg's Youssef Gamel Eldin joins us with a special guest for the latest. Youssef?
Matt, what I will say is that we're getting more and more high-level representation from the United States. I mean, they're taking over the place, and we managed to connect with one of the key people, and that is Ali Zaidi. He's the U.S. Chief Climate Advisor, White House Climate Advisor. Thank you very much for joining us. You guys are taking over this space. It's unbelievable. Anyway, you've got a busy agenda, a lot of meetings lined up. Let's first get a bit of a sense of what looked like, some of the initial midterm results. In the event that we get a Republican House, how does that affect the Inflation Reduction Act and the billions of dollars of climate spending that are tied to that?
Well, one, I think we've seen in the way the American people turned out a validation of the president's economic theory that investing in clean energy is good for our consumers, it's good for manufacturing, it's good for our economy. And number two, a lot of what the president's put together over the last several years through the bipartisan infrastructure law, which was heavily focused on clean energy and climate, and then the Inflation Reduction Act, has enjoyed bipartisan support, whether it's in Congress or in governors' offices or around the country, with mayors from both parties stepping up to take advantage of the irresistible economics of clean energy. So, I think the momentum here is secular. It's going in one direction. It's been pretty clear that that's where we're headed. And I think actually the pace is increasing because more and more businesses, more and more workers are seeing the upside.
In terms of some of the climate goals that the U.S. has set out, the plan is to reduce emissions by, 50 to 52% by the end of the decade. The analysts we've spoken to suggest that's not very realistic. We're looking more at 40%. What needs to be done to kind of ramp up the target and make it more realistic? I mean, what else needs to be added to the effort?
So, look, where we started was around 20%. We've already, in the first 2 years of the Biden administration, racked up enough policy that gets us in that 40% range that you talked about, independent analysts showing the pathway to. We've got a bunch of additional policy yet to do, and I think what we're seeing is a flood of private capital also come in alongside the public investments to help us meet these goals. I'm really bullish on the power of the transformation in the industrial sector, where I think a lot of folks are under-focused and under-invested. Things like cleaner steel, cleaner cement, and aluminum. There are hundreds of millions of metric tons to be had there. We're focused on that. And I think the power sector transformation is going to happen at a faster clip than people have anticipated.
What about the visit of the U.S. president expected in the next few hours? Is he going to unveil a major new announcement? Could you give us a bit of a preview of what to expect?
I think the president will talk about how much of a priority climate and clean energy has been for him from day one, how he's delivered on the goals and commitments he's made consistently and unambiguously from day one, and the work that we have yet to do, including ways that we can increase ambition, and I'll leave it to him to talk about how we do that.
I think one of the contentious issues at this summit has been around what wealthy developed countries need to do in terms of compensating those that are less well off from times prior, and I mean all the way prior, like the industrial age, as the Chinese delegation made clear. To what extent do you agree that there is a level of responsibility that the U.S. does carry, and that there needs to be some form of leveling out?
Well, one of the most important things is that major economies have to make major emissions reductions, right? If we're going to get to 1.5 degrees, anywhere near that, the United States and other countries need to step up, and that's exactly what we're doing. But to your point on resilience and adaptation, the president launched and has leaned into a Prepare initiative that's helping 500 million people across the world adapt. He's deposited the first installment of funding into the Adaptation Fund, $100 million. Our Development Finance Corporation's done over $2 billion of deals on clean energy just this past year. So I think we are keyed into this conversation. It's an important one to be had here at Sharm el-Sheikh, and it's about moving together in the direction of a cleaner, more sustainable, more resilient economy.
So have you spoken at all to your Chinese counterparts? I mean, I understand from John Kerry that there have been some talks, but it's not clear to me what the extent of those talks were. Have you met anybody from your Chinese counterparts?
You know, I've been here on the ground for less than 48 hours. I have not had conversations with folks in the Chinese delegation. Have talked to folks all around the world and in the private sector as well. And what we're hearing back is just a sense that this is a critical moment. We can't miss this opportunity. We got to figure out how to go fast together.
I need your help with something, Ali, because I'm trying to figure out why all this major environmental regulation, right? Rules to clamp down on methane emissions, pollution from auto tailpipes, all these great ideas, but they're stuck somewhere in the system. They need to be finalized by the EPA, and that's not happening. Where's the holdup?
Yeah, I don't think that's true. Number one, we have finalized tailpipe emission standards, and we're working on the next round, but we've finalized the most robust standards that we've ever seen in the United States. On methane emissions, in the Obama administration, we looked at new sources of oil and gas. This administration's actually put a proposal out for existing sources of oil and gas. We finalized regulations to tackle hydrofluorocarbons in line with the Kigali Amendment. And we've done all of that operating from a deficit 2 years ago, where we had to deal with a number of rollbacks and reversals and a real hollowing out of the administrative state in the United States. So we're going really fast, and if the question is, are we going to go faster and faster? The answer is absolutely yes. But I don't think there's a stone that's being left unturned.
Ali, great catching up. Thank you for making time. That is Ali Zaidi. He's the White House National Climate Advisor. As I mentioned earlier, we're expecting a congressional delegation here from the United States and the U.S. president in the next few hours. So stay tuned to this space. Matt, Anna?
Okay. Yusuf, thanks very much. Yusuf Kamaluddin in Sharm el-Sheikh with the US government perspective. Coming up on this program, we'll get back to the crypto story, back to the crypto fallout with Aaron Kaplan, CEO of Prometheum, an SEC-registered market ecosystem for digital asset securities. What does he think went wrong at FTX and what happens next? This is Bloomberg. This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, an interview with the AMD CEO, Lisa Su. That's at 5 p.m. New York time, 10 p.m. in London. This is Bloomberg.
Lack of disclosure, opacity. We've seen the use of other people's money and trading ahead and using other people's money, but we've also seen the use of leverage.
We need to have strong global standards to make sure that there are no gaps in the international regulatory framework where you can see risks like this spread and you can have the risk of contagion or even systemic risk spreading to the broader financial system. I don't think we're at that point.
couple of U.S. regulators there weighing in on the chaos in the crypto industry, sparked this time by the warning from FTX of a potential bankruptcy, and really the founder begging for a bailout of $4 to $8 billion. Joining us now is Aaron Kaplan, founder and co-CEO of Prometheum, which is a platform that links securities, traditional financial securities, to the crypto world. Aaron, thanks so much for joining us. Let me ask you first what you think happened with Sam Bankman-Fried and FTX, because he was seen as a white knight in the community as other businesses failed, compared often to JP Morgan, and talked about as, you know, a huge billionaire with massive ideas about saving the world. Where did he go wrong?
I think what was wrong was the lack of institutional controls, which led to excessive risk being taken and resulted in likely the retail customer being harmed. I think that a lot of the time people have said that regulations are necessary, that decentralization is incongruent with regulation. But what we're seeing is that in order for an industry to mature, there needs to be the proper regulatory frameworks that allow customers to be protected, that allow customer funds and funds to be properly segregated, and that ensure that there is investor confidence in the industry.
So what, you know, needs to happen here first and foremost? I mean, my thought is rules about how you deal with customer capital and on transparency. We didn't have a lot of that in this case. What would you like to see?
I think that the best way to mitigate these type of actions is to apply the existing securities rules and regulations, which protect investors, ensure fair and orderly markets, and ensure that customer funds and assets are protected. What that requires is regulating intermediaries in the digital asset space, meaning virtual currency exchanges and custodians, as broker-dealers, and requiring them to register under the securities laws, which would provide the institutional controls, the reporting mechanisms, and the regulatory oversight needed to prevent future debacles.
So you think, good morning to you, Aaron. So you think we don't need any new rules, we just need better application, or you think we need to take existing rules and apply them to these asset classes?
Again, I think that the existing federal securities laws are the best framework through which to regulate almost all the processes in the digital asset space, particularly intermediaries. If you've listened to what Chairman Gensler has said historically, he said that virtual currency exchanges and intermediaries should register under the securities rules, and the SEC has provided frameworks for the trading and custody of digital asset securities in the three-step and special purpose broker-dealer releases. And operating within those frameworks is the best path, in my opinion, to achieving compliance.
When we think about contagion here, and we've already seen it from one coin to another, we've seen it from one part of the crypto sphere to others, and then we've seen it into other assets, certainly in terms of risk sentiment, Aaron. What is the method by which we see that contagion take place, and therefore what is still left to come? How much downside is there still for various assets as a result of this?
I would say in the immediate term, there's significant risk, as we will see a loss of investor confidence, potentially significant harm to retail investors in the event of an FTX bankruptcy, which is a major issue, and I think something that will result in significantly enhanced government oversight. And we'll also continue to see the extreme volatility that we've seen over the past few days. Beyond that, we'll also likely see greater government scrutiny on the enforcement side, and really, hopefully, the swift application and more stringent regulatory frameworks, such as the federal securities laws. But one point, and I think this is important, this enhanced attention that from lawmakers and regulators is going to be a good thing, as it will result in the regulatory clarity that many argue is needed to end the crypto winter and bring about the crypto spring.
Aaron, you, in terms of your own platform, somewhere on the website, you say that Prometheum is an alternative trading platform that allows customers to trade digital crypto assets in a securities market. You're using that word specifically, I think, because you're SEC regulated. You also have been approved by FINRA as an alternative trading platform. What did you have to do to get that? Does that ensure the safety of your clients? And why aren't other people doing it?
So Prometheum ATS is registered under the securities laws as an ATS that allows for public trading of digital asset securities. I think the reason that a lot of people sort of were deterred from that path, it was because it was more difficult. to operate in a regulatory gray zone or to operate under the money transmitter laws, it's a much lower burden, in my opinion, than operating under the federal securities laws, which are the most comprehensive framework to protect investors, ensure fair and orderly markets, and protect and segregate customers' funds and assets. It's harder to implement. So I think that often the people who argue that there's a need for new laws are the people who are best served by the current lack of regulatory clarity. And their argument is really that the existing laws shouldn't apply because we didn't operate in that sense.
Okay, tell me a bit more about that, because you talked about how this is going to trigger more government oversight. So no doubt, Aaron, people like you and other players in the crypto space will be asked to go and speak to lawmakers, help them understand the challenges here, help the sector work better. But we saw Sam Bankman-Fried doing a lot of that. No doubt trust has broken down here a little bit between those who operate in the crypto space and lawmakers. How is that trust going to be rebuilt?
To my reading, FTX and SBF were one of the largest contributors to the concept that digital assets should be regulated by the CFTC. I'm a securities attorney by trade. If you understand securities laws, if you follow the Howey test and its progeny, it's pretty clear on its face that the overwhelming majority of digital assets, arguably every digital asset aside for Bitcoin, is a security and should be regulated as such. And people who have argued for anything to the contrary often are serving their own purpose there. So I think this will clear the way for the proper application of the securities laws to the digital asset space. And what we saw this week with the library decision, the summary judgment the SEC received in their favor, is that the argument that tokens aren't securities because you put a disclaimer or because you say this is an investment is spurious at best. And what we're seeing now, and I think this will impact going forward what happens with Ripple, is the clear application of the securities laws in a proper way and to the digital asset industry.
Well, maybe that's what it's going to take to rebuild trust in the sector. Aaron, great to get your thoughts. Thanks so much for joining us. Aaron Kaplan there is the founder and co-CEO of Prometheum, talking to us about what has happened and what needs to be done. Be sure to join Kailey Leinz and myself. Sonali Basak will be with us as well for a special 1-hour edition of Bloomberg Crypto this afternoon. Our guests include Democratic Congressman Stephen Lynch, chairman of the Task Force on Financial Technology, and the Republican SEC Commissioner Hester Pierce. So a lot about regulation today, maybe a little bit too late for some. That's today at 1 p.m. New York time, 6 p.m. in London. We're really looking forward to it, so we hope you join us. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. Now let's take a look at what lies ahead today. The UN publishes its twice-yearly food outlook report against a backdrop of supply disruptions caused by the war in Ukraine. Also today, the counting in the midterms continues with many crucial races yet to be determined. Control of Congress hangs then in the balance. And fresh from hailing Democrats' performance in the elections, President Biden heads to the UN climate talks at COP27 taking place in Egypt. Plus, a number of Fed officials are due to speak today with Waller, Harker, Logan, Daly, Mester and George, seems like all of them, due to give their thoughts on monetary policy at events across the country. And top of their watch list, US CPI, that reading due at 8:30 a.m. Eastern time. And Matt, we need to focus on that.
Yeah, absolutely. Cannot wait to see that CPI print. As I said earlier, 11 out of the last 12 months, economists' survey has been too low, and we've seen that number beat. So it'll be interesting to see what happens today. Let's get more insight from Valerie Titel. She joins us now, Bloomberg Markets reporter, with a look at what to expect. Valerie, what are we wanting to watch?
Look, it's all about the core CPI print today. It's expected, the year-on-year numbers are expected to tip down from 6.6 to 6.5. But I'd argue, who cares about when it peaks? It's all really about how persistent it will be. And to show this, I've got a chart here of the U.S., the goods versus services inflation. And a lot of the narrative this year has been about the handoff from goods into services. We know that 2021 was all about the supply bottlenecks of COVID causing goods services to spike. spike. But 2022 showed us it really wasn't just about the bottlenecks. The U.S. had an excess demand issue, and this inflation fed into services. The question here, Powell was upset about how the extent to which goods dropped. And maybe I'm jumping to conclusions, but I think he's going to be disappointed about how quickly services will fall.
Okay, we'll watch that. Valerie Teitel on the markets. Thank you. That's it for Early Edition. Surveillance is next. This is Bloomberg.